Hey, welcome to the channel. This is the ANDIKA Bulletin for the 14th of November 2022. So we had cooler inflation, easing COVID lockdowns in China, and chatter around a Russian-Ukraine peace hopes. And they were the trifecta of bullish themes that outweighed any contagion from the FTX shit show that sparked a massive amount of carnage in the crypto markets this week. So everything's awesome, right?
Keep telling yourself that, darling.
Because if everything was so friggin' awesome, why is Goldman's trading desk pointing out that institutional put option hedging just hit a record high? Look at that chart. And after Friday's avalanche of less hawkishness, none of them were actually really dovish. Friday was another flurry of Fed speak from this time Boston Fed President Susan Collins, and she said the central bank has more work to do to tame inflation, but the risks that the central bank goes too far have increased after a string of large rate increases. So here's two of her quotes. I think that as we have raised rates, that the risk of over-tightening has increased, Collins said during an interview with Bloomberg. I do think we're going to need to raise rates further. Collins said that a smaller, more deliberate rate increase should not be confused for a sign that the Fed is backing down from the task of curbing price pressures. So that message seems to be uniform, more to come, but a slowing pace, and an over-tightening risk is a thing, which is exactly the opposite of what Powell said during his press conference. Go figure. So Fed speak on top of cooling CPI sent the Fed trajectory rate expectations dramatically dovish and lower for the week. And that in turn sent stocks soaring to their best week since the 6th of November 2020, led by a 9% explosion on the NASDAQ. The Dow was the laggard of the major US indices, only going up 4% for the week. The S&P 500 on Friday broke above their 50 and 100-day moving averages. And on the week, the tech, the longest duration tech stocks were the biggest gainers, up over 10%. You can see here that the seasonals are definitely in your favor. Now, the last 2 days have seen the biggest short squeeze on record. Based on Goldman's most shorted basket, and there is such a basket, the 19% surge from Wednesday's close to it was bigger than March 2020's rebound and the January 21 melt up in the highs, as seen by the chart. Nothing is compared to the unprofitable tech stocks, which exploded over 26% higher in the last 2 days. And there is also a chart for that. While stocks and crypto have become increasingly correlated once again in recent weeks, the last couple of days, thanks to the FTX contagion, they have sparked a major decoupling. US treasuries were also considerably lower. The US dollar extended their plunge on Friday for the biggest 2-day drop since March 2009. That's down 5 of the last 6 days. The world's reserve currency has now lost over 5% against its fiat peers to 3-month lows, breaking also its 50 and 100-day moving averages. With the dollar tumbling, we've seen all other currencies have a run, and the Aussie dollar now is around 67 cents. The Japanese yen has also exploded higher as well. There was a big bloodbath in the cryptos after the FTX explosion. Both Bitcoin and Ethereum were down over 20% for the week. Bitcoin did get as low as 15,000, but has since recovered a little bit there. Gold's actually soared. It's topping around about $1,717 US, the highest in 3 months. That's the best week for gold since March 2020. And oil ended the week lower as well. Finally, we have seen these bear market rallies before. Have a look at this chart. You are here And that's where the potential for the market could be. So be very, very, very mindful. And US stocks in particular appear to have priced in a dovish Fed without considering that a dovish Fed will only be that way if the economy literally craps itself. And while the terminal rate is lower, back below 5%, it is still very, very high. So is the third term the charm? Or will Powell end up pissing in the punch bowl when he meets again on December 13 and 14 to work out just how much he's going to hike up interest rates again? Anyway, that's today's ANDIKA Bulletin. Happy Monday. We'll catch you tomorrow. Till then, take it easy.